Hey guys, welcome back. I hope you had a really great day trading today. So today was Thursday, January 30th, and before we go over today, I need to know, did you guys see these charts out on TradingView today? I didn't make a video last night, and when I wake up too late or I don't get a chance to make a video, I do post the charts out on TradingView. So this chart and all the charts we're going to go over today were on TradingView this morning. So here's the link. Make sure you subscribe. It's free and you'll get notified every time I post a chart. And today was a really fun day. In SPY, we did open with a gap up. We gapped all the way up to this down gap from yesterday. And from there, you could see the wick took it up to the next gap. And as soon as we closed out this up gap part of that gap right here, we got pushed back down. So we closed this morning gap back underneath the 35 EMA, and then we did come back up. We found support on that 35 EMA and tried again. We took it up to this next gap, and you could see in that very last candle here of the day, we got pretty violently rejected out of it. The long wick takes it all the way down to center, and then from there we did see a move back up into close to close just underneath this gap. So the last candle was extremely volatile, and what a wild close to the day. And SPX, same thing over here. We did open with a gap up, and we took it to this first gap, closed it out. That wick did take it up to the next gap, and we got pushed out of it. So this island gap up here smacked us back down to close out the morning gap. Then we swung back up, gave it another try, and as soon as we got into this down gap here, and you could see that this up gap part of the island gap was closed out with the wick. So then when we came back up, we just had the down gap, and the down gap slapped us out. That huge volatile candle, you could see that long wick, took us all the way down to center underneath the 35 EMA, and then we came back up to close just underneath this island gap. So just a little bit short of the top of the implied move, which was 60.95. We did stay within the implied move here, and SPY closed up 0.54%, SPX up 0.53%, VIX came down 4.35%, so we're back down in the 15s, and both SPY and SPX did close within the implied move. And QQQ today, we did open here with a gap up, and right when we got into this island gap, we got smacked out and back underneath the 35 EMA, the 30-minute 200 moving average, and we did bounce up on the, sorry, I said that wrong. This is the 1 hour 200 moving average. We got underneath the 1 hour 200 moving average. Right here, we bounced right on the 30-minute 200 moving average. And then from there back up, we did bounce on that 35 EMA. And then we tried one more time and got rejected back out of that gap. And you could see that long wick here too, took it all the way back to center. And then we came back up. We still have quite a lot of this island gap, which it has been a pretty strong resistance here, and we have quite a bit of it left. So we did come up about, we did close up about 1/3 up the implied move, didn't quite make it to that 528, and QQQ closed up 0.43%, VXN down 3.88%, and we did trade completely, and we closed within the implied move. So we're still trading within this tangled mess of moving averages and getting pretty stuck in there. IWM today opened with a pretty big gap up, took it up just underneath that 50-day moving average, and you can see the first few hours we saw resistance right at that 50-day moving average, and then around 1 o'clock we broke up, got to the top of the implied move, and then we took it all the way to the top of the next day's implied move before pulling back underneath the 50-day moving average. Now, I know I had the top of the implied move set at 230, and I was going to take 230, 231 bear call spreads. I took it even lower. I took 229, 230 bear call spreads, and when we were up here, I thought I was definitely gonna lose those, but that last candle brought us back underneath the 50-day moving average, and you could see 229 is right here just above the 50-day. So I did win that trade. I honestly can't believe it. I thought that was not gonna happen, but IWM closed up 1.02%. RVX also closed up 1.2%, and we did close within the implied move and above the 35 EMA. So above the 35 EMA, underneath the 50-day moving average. And lastly, we have DIA. DIA has been trading near the top of the expected move for the week. You could see earlier in the week, this was Tuesday, we had a rejection here. Then Wednesday, we had a rejection here. Today, we had a rejection there as well. So as soon as we got above here, we saw that last candle bring us back down. So far we are at the top of the expected move here at 450. We're just a little bit underneath that, 448.82. And DIA has been trading above this 35 EMA quite beautifully, actually. So we have one red candle over here, and we did get pulled back up. So we are pretty far away from the 30-minute 200 moving average, but I wouldn't go short until we can print 1 or 2 red candles. Sometimes I'll even wait to see 3 red candles, but until then, we are still bullish and still trading above this 35 EMA. We are definitely pushing higher on lower strength. You could see these are lower highs here, but we're just so close to all-time highs that I wouldn't be surprised that we see a pop up to try and get higher before pulling back down to this 30-minute 200 moving average and hopefully closing within the expected move for the week. All right, that was a recap of today. We also had Apple earnings, and I did put out a short still video for Apple today, and let me pull that up real fast. This was the expected move for earnings, and if we take it to extended trading hours, you could see that today we did drop at first, and then we popped back up. So we didn't quite take it to the edges, but we did make a pretty solid move. And this contract expires tomorrow, so we'll see if we can take it up to 250. All right, that was a recap of today. Tomorrow is the last trading day of the first month of 2025, last day of January, and let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications. And if you took a really great trade and it's because of something you learned here, then I do have a virtual tip button, and it looks like this. Alright, so starting in SPY, tomorrow's implied move is between 600 and 610, and that is from options. And the implied move on Monday's contract is between 598 and 612. Today we don't have the 30-day average volatility. TradingView is acting up a little bit, so I'm not able to get that calculation, but we really don't need it. We can use tomorrow's implied move and Monday's and get plenty of information from that. So to the upside, the first level to look for is going to be the rest of this down gap. Ever since we gapped down on Monday, we have been chipping into that down gap, and actually it was an island top. So we did have this up gap and this down gap, but we did close this down gap today. With that first candle, we had a little bit left over here and we closed that. So now we just have the bear gap, and we did get pushed out of that bear gap at the end of the day yesterday. So that is going to be our first level, and the bottom of that gap is at 606.50. Top of that gap, which tends to be a resistance once it hits and fills, 608. If we do get above that and push higher, 610 is the top of the implied move. All-time highs just above that at 610.78. And 612 is the top of the implied move on Monday's contract. So if we do push up tomorrow to the upper half of the trading range, I would actually be looking at 611, 612 bear call spreads. Get just above that previous all-time high, and then hope for a pullback into the implied move. And then underneath us, 35 EMA. It has been a choppy level for us this week, and we did get above it today, a little bit of support there. But if we get rejected from this down gap and pushed underneath this 35 EMA, then the next level to look for is going to be 600. And right around there, we do have a previous support. And underneath that, 30-minute 200 moving average. The 1 hour 200 moving average is still pointing down. We're not going to get too far with this pointing down. 50-day moving average is down there as well, and you could see that at the very beginning of the week when we did take that big drop, that 50-day moving average was there, and that is what caught us, and it did pop us back above that 35 EMA. So not a terribly difficult trading range, and mostly what you need to know is resistance right here, top of the implied move at 610, all-time highs, 35 EMA, and 600. And if you can keep those levels straight, you're going to have a good day. SPX, the implied move for tomorrow is between 60.20 and 61.25. That is from options. And on Monday's contract, 6,005 to 61.40. And to the upside, we have that same down gap right here. Top of that down gap, which is resistance, 6100. If we get above 6100, 6125 is the top of the implied move, and then we have all-time highs. 6140 is the top of the implied move on Monday's contract, and if we do get up here, because I like those nice $10 spreads, I would choose 6130, 6140 bear call spreads. That would take us just above all-time highs, and it would be a little bit safer than that 6125. To the downside, 35 EMA, and then underneath that, if we do drop, bottom of the implied move is 60.20. We do have another support level right there. That's a little bit closer to 60.15, and then 6,005 is the bottom of the implied move on Monday's contract, and then that 30-minute 200 moving average is coming up. It did come above the 1 hour this week. That was bullish right here. And then above the 2 hour this week right here. The 50-day moving average is also the 2 hour 200 moving average. And they're still not in a bullish order. We want the 1 hour to come above the 50-day moving average as well. Right now, it's still pointing down, and the 50-day is flat. That definitely is neutral to bearish. But we did get this come up, the 30-minute come up above these two, so a few mixed signals below. And then QQQ, the implied move for tomorrow is between 517 and 529, and that is from options. That is a 1.1% move. And on Monday's contract, 510 to 531. And to the upside, we do have this island gap right here. We did get pushed out of it today twice. And then the top of the implied move is at 529, which is at the very top of where the two gaps overlap. 531 on Monday's contract, and then underneath us we do have the 35 EMA, the downward facing 1 hour 200 moving average, the 30-minute 200 moving average, which we did bounce on today, and then underneath all of that, the 50-day moving average. 517 is the bottom of the implied move. 515 is the bottom of the implied move on Monday's contract. And if I was to look for a bull put spread, if we drop, I would probably look to 516, 515. And then likewise to the top, I would choose 530, 531 if we do take it up tomorrow. And then IWM, the implied move tomorrow here is between 225 and 232, and that is from options. That is a 1.4% move, and Then on Monday's contract, it is 224 to 233. And to the upside, we do have that 50-day moving average that we did see resistance at today, and we have seen it as resistance. If you recall, that 50-day moving average was right here before it turned. So it was resistance here, here, and then here. Today we did get above it, but then this resistance right here, which I don't have straight at all. Let me fix that. So this resistance looks like that. I don't know why it was so off, but there you go. So resistance right above that 50-day moving average is at 230. And then above that, 232 is the top of the implied move, and 233 on Monday's contract. I would choose 232, 233 if we did trade up tomorrow for bear call spreads. And then to the downside, the 35 EMA. So interesting level right off the bat, this downward facing 50, and then the 35 EMA right underneath it. If we do drop underneath that, then we do have, and I don't have this in right, this is the up gap from today, and we did fill a lot of that gap with that last candle. So, but that's still open, but as of now, it did act as a support when we dropped into it. So bottom of that gap is 226. At the bottom of the implied move for tomorrow, we have the 4-hour 200 moving average, then the 30-minute 200 moving average, and underneath that, that downward facing 1-hour 200 moving average. So lots of stuff to the downside. Don't underestimate a downward facing 1 hour. It is very capable of lots of chaos. And then we do also have this up gap, and that is at the bottom of the implied move on Monday's contract, just above 224. And then lastly, DIA. We do have an implied move on the day between 442 and 455. The implied move for the entire week from the start of the week was 438 to 450, and you could see that that 450 was a resistance all week. So we did see it on Tuesday, Wednesday, and then today, and each time it kicked us back to the 35 EMA. So that 35 EMA just underneath us, and actually on top we do have all-time highs, so that is a real target for tomorrow. It's so close that it's definitely going to be a target. And then if we get rejected there, 35 EMA underneath, and then top of the implied move on the week, 450, that is a level. And really the exact top of the implied move is 449.48, so I rounded it up to 450. So 450 I would think would be a decent strike to choose. However, in the past couple weeks, we didn't close within the implied move on the week. So do that at your own risk. And then underneath that, so 442, bottom of the implied move. And then this right here is where we did see support on that one red candle that took us right back up to the 35 EMA. That is at 440. And 30-minute 200 moving average is outside of that implied move, and underneath the 50-day moving average, we could see a rejection here, and that 30-minute 200 moving average starting to pull us back down here. So lots of stuff to look for. Happy Friday, guys. Have an amazing weekend. Have fun. Trade safe. Make sure you take profits when you're up, and I will see you guys next week.